Working from home in France could trigger a tax bill you never saw coming. Thousands of remote workers are making a simple mistake on their tax return right now, and they do not even know it. Here is the number one trap in practice. Many workers receive a telework allowance from their employer, often set up through a company agreement after COVID, and then also claim the daily tax deduction on top of it, thinking they can stack both advantages. That is a mistake. The tax authority penalizes this double dipping. Your employer pays you a monthly allowance. You think, great, that is covered. Then you file your tax return and claim even more. If your total telework allowance exceeds the official cap, the excess amount can be reclassified as taxable income. That means you could owe back tax on money you thought was tax-free. Most workers never check. Most employers never warn you. The legal framework for remote work costs rests on three pillars: the Code du Travail, Articles L.1222-9 to L.1222-11, the National Interprofessional Agreement of November 26, 2020, and case law from the Cour de Cassation. The telework allowance is exempt from Social Security contributions, within the applicable ceilings and subject to supporting evidence. The 2026 tax schedule applicable to 2025 income was set by the Loi de Finances pour 2026, promulgated on February 19, 2026. That law revalued all income tax thresholds by plus 0.9%. These rules apply to every private sector employee in France, whether you work from a Paris apartment or a house in the countryside. In 2026, the tax authority grants an exemption on telework allowances up to 2.70 euros per day worked from home, that is 59.40 euros per month, and a maximum of 580 euros per year. Go €1 above that and the excess becomes taxable income. With the 2026 tax brackets, a single person pays 0% up to 11,600 euros of net taxable income, then 11% up to 29,579 euros, then 30% up to 84,577 euros. So if 1,000 euros of telework money gets wrongly reclassified as income and you are in the 30% bracket, that is a €300 surprise bill. Since June 1, 2026, the minimum wage, the SMIC, stands at 12.31 euros per hour, or 1,867.02 euros gross per month for a 35-hour week. Employee social contributions represent approximately 20 to 23% of gross salary. Every euro misclassified on your payslip or tax return compounds those deductions. 3 things you can do today. First, check your payslip right now. Look for a line called Indemnité Télétravail or Allocation Forfaitaire Télétravail. If your employer pays you an allowance of up to 626.40 euros per year, that amount is fully exempt from income tax, but it is exclusive of the 2.70 euros per day tax deduction. You cannot add the daily forfait on top of your employer allowance. Second, go to impotences.gov.fr and use the official income tax simulator to compare the standard 10% deduction against declaring real costs. To declare real telework costs, use Form 2042 and enter your amounts in boxes 1AK or 1BK during Step 3 of your online declaration. Third, keep every receipt, electricity bills, internet invoices, furniture, because anyone declaring real costs must hold supporting documents in case of a tax audit. We have published the full breakdown, with a worked example for every tax bracket, at EuroDuty.eu. The link is in the description. And use our free salary calculator to see exactly what you should be taking home.